Hello and welcome to LedgerCast. My name's Brian Krogsgaard. I'm here with Josh Olszewicz. Hey, Josh.
Mr. Brian, it's good to be back in my natural habitat this Friday afternoon.
Well, yeah, it is wonderful to be back. It's wonderful to be with you, and it's wonderful to be with all the people of the show. This episode of LedgerCast is brought to you by TokenSets. You can go to ledgerstatus.com/sets to check it out. It's simplified asset management. Use their battle-tested asset management tools and infrastructure to easily manage your your crypto portfolios. The DeFi Pulse is on TokenSets. The FLI, which is like the leveraged ETH thing, is on TokenSets. There are many great products that you can explore. My own Tulip project is on TokenSets. Happy to have them as a partner of LedgerCast. And with that, we're gonna hit the content here and get started. Josh, how you doing today?
Good. You know what I just realized? TradingView put cryptocurrencies at the top of the list, above stocks, above currencies, above indices, futures, and bonds.
As it should be.
For those of us who were here long enough, we'll realize that crypto wasn't always at the top of TradingView. They were very early on in adopting information for crypto, which is super, super important.
And that had to have made their business. Like,
100%. 100%.
Yeah. Crypto makes you chart more than other asset classes because you're trying to figure out why is there so much volatility? I have to look at it. And it was just, made people lean into the, to the charts because you didn't have anything else to rely on.
Yeah, you can't, a lot of this stuff, what else do you do? Like the fundamentals are kind of like, I'm not good at like valuations outside of crypto. Not that I'm good at valuations inside of crypto, but what do you even look at for stuff like oracles or, we can talk about TAM, I guess, but I don't know.
Yeah, the fundamentals are like still figuring themselves out. Like, what do people value? What do they consider a worthy fundamental to talk about? But we're going to talk about the technicals for now because I just want to get straight into Bitcoin, which you could talk about it being a potential distribution top. Like, this is a long consolidation.
Just listen. Just because this isn't up only doesn't mean you have to call this a distribution top. Okay.
I'm saying it's a distribution, but it may be reaccumulation. You're spoiling my.
You're just saying up or down. You're just saying up or down.
February 21st, we made a top. We have not had an impressive newer high since then. They've been crappy new highs, and now we're at a lower high. So if it's the top, then we would break down more fully here. And eventually, if we don't make a new high, I think we would actually go find the 200-day moving average around 40K and just like really start to look ugly over time. However, I don't think this is what tops end up looking like. So I actually vote on this being reaccumulation. My trading system says this is where you're in as it flips the fast moving average. And overall, I'm bullish, and this looks like relatively healthy consolidation, but it is, as you say, not up only. Neither the show or the chart. It is consolidation only on this chart. Do you have additional Bitcoin thoughts before we dig into other things?
Of course, that's my bread and butter. Of course, I have thoughts on the corn. I mean, ultimately, what this comes down to is: are we making higher highs or are we making lower lows? We shouldn't be making lower lows in a bull market, right? Fundamentally, shouldn't be over time, over a long period of time. That's why this first drawdown was 25% from the top. It was both a mean reversion point as well as a wake-up call that things are going to get bumpier from here on out. It's not just going to be markup, all-time high, like some of the other coins are experiencing right now. So yes, going forward, what I'd like to see is a higher high. I mean, ultimately, that's what you're talking about. That's what everybody's looking at with any horizontal lines here. Even a local...
A daily close over 58 would be a great start. Even that's not like a new high, but it's a new daily high, like relative to last week, Even though the all-time high is like 63, 64. In my mind, over 58 gives it strength. Over 60 makes it kind of imminent new highs, in my mind. You agree with that?
Yeah, anything over 58.59 is fine. As long as we're not making lower lows in a big way, I am not concerned in the least. I'm happy that we're chilling out. That just gives us more fuel in the tank. I'm happy that alts are running because that means there's going to be rotation back and forth. There already has been rotation all over the place to a bunch of junk.
How do you really feel?
I don't want to be the guy who's like, I can't believe you traded blah, blah, blah. If you made money on any of this goes for the rest of the show and anything for the rest of my life. If you made money on trading anything, I'm happy for you. Okay. Just realize those profits are likely fleeting and ETC is not a store of value. Okay. So keep that in mind. You never went broke taking profit and be smart about it.
Yeah. ETC going up is purely got to be a Robinhood lag effect thing, right?
I agree. But I was just going to say, take this from somebody who's been around since 2013 and seen fortunes come and gone over and over, not personally, but for a lot of people. Protect yourself against yourself, hedge a little bit, live your life, spend some fiat, do whatever you got to do, but don't leave it all in freaking ETC and watch it go to zero. Anyway.
Lucky in the chat says this is FUD, that ETC is the real Ethereum. He's joking, but a lot of people do believe ETC is the real Ethereum. Charlie Lee told me that yesterday, and that's fine, but that doesn't mean that's what people chose. So it can be the real Ethereum, but it's not the Ethereum that matters.
The thing you got to realize, especially with the maxis like Samson, like Charlie Lee, love them or hate them, they are going to try to dunk on ETH as many times as much as possible. So
yeah.
If you see Adam back pro ETC, if you see him pro whatever, it's most likely because he's anti-ETH. I think not because he's pro ETC.
My favorite narrative of folks like that, though, is when they're then like pro BSC or like things like that are far more centralized, because in their mind, ETH is centralized. So it's just like cherry on top to just say like, might as well use something else that's even more centralized because at least it's fast, that kind of thing. Yeah, and I'm like, that's ridiculous. Like it's obviously incorrect, but based on their initial perspective of Ethereum, it does make sense why they believe that, because they think Ethereum is all the things that like all the critiques someone like me might make about, say, a BSC or other centralized, sidechain, more scalable version of ETH, whatever.
Yeah. And I think it's important that people are aware of that and keep that in mind when they're looking at someone who has been in the industry for a long time and they're saying some weird stuff. Just keep in mind there's probably an angle there. Real quick, back to BTC. I'm really just paying attention to this daily TK cross, currently bearish above the cloud. And if this crosses bullish, which it should in the next few days, so long as BTC stays above the cloud, typically it's 10 to 30 days from the bear cross, we will see a bullish cross, and that is more bullish than it was in October. And people made fun of me in October because they said, that's not a TK cross. You can't have the Kijun crossing below the Tenkin. And I said, whatever, dude. And just look where we are now, right? So if we get any variety of cross that's bullish, even if it crisscrosses 40 times after that, you should still, I'll be treating that as a strong bullish continuation signal. Not investment advice. Just keep that in mind. Otherwise, so it's a decision tree. I did a video about this on my YouTube channel, but there's two options. The first option is bullish TK recross above the cloud, bullish continuation. We go to 80, 100K. The second option is we stay bearish on the TK cross and we move through the cloud. We traverse down through the cloud to 39 to 43, somewhere down there. Those are the two options that I'm looking for. Those are my two trade setups for BTC that I'll be trading on leverage.
The traversal.
Yeah.
That's not my wallet. Welcome, new listener. What's the cloud?
Oh, man.
The Ichimoku cloud. We may have some new listeners, so that's fine. We want to explain it. It is a system that's not dissimilar from moving averages, but there's a good bit more information by the way they all tie together. Josh can go into more depth, but when the cloud is green and the price is above it, generally you're bullish. When the cloud turns red, you're bearish. There's various things that can cause you to adjust your bias. In a bullish market, you may buy that red line as a pullback worth buying. It's kind of like a 50% retrace within the trend. It's called the Kijun. And then the blue line on Josh's chart is the Tinkin. That's equivalent to maybe like a fast moving average. When those cross one way or the other over each other, the fast one goes below the slow one. That's indicative of losing momentum. When the fast one crosses back above the slow one, that's indicative of positive reversal or continuation. And then, Josh, what are the criteria that all things that need to be happening on the cloud for like 100% bullishness?
Yes, everything you said is 100% correct. But if we're completely bullish, you want to see the fast over the slow, MA, essentially, and you want to see the green cloud. And basically, this whole system is just a series of checks and balances. Is it okay to go long? Is it okay to be bullish? Do I have permission to open a trade here? That type of thing. And the goal of the entire system is to capture 80% of the trend. So it's never going to get you in at the very bottom. It's never going to get you out at the very top. But when you see the TK cross recross like this is the entirety of the trade. This is exactly what you're looking for anytime you see an entry signal on the long side. So as far as performance is concerned, backtesting, settings, like I couldn't be happier with this entirety since October. Perfect.
Crypto Gypsy, it is very indicative of things that have already happened. Yes, it is represented by things that have already happened. One of the things that's different about the cloud versus, say, moving averages, which I use more than anything, is that it actually does project out some stuff because the cloud is offset positively, which kind of gives you some leading enhancement. But all estimates of future price action is always based off of historical price action. So that's like not just the cloud. That's literally everything.
Sure. But like I think the importance is to understand the possibilities and potential. This isn't predicting the future as much as it is understanding the back testing, the signals, whatever. Like if you use chicken bones, I don't care. Like if you think this is garbage, I don't care. Like that doesn't matter to me because I understand what I'm looking for and understand what to do when I see it. So when I see this cross in October 17th, that was it. You know, it didn't look great. It didn't look special. We didn't push multi-year highs here. There was nothing, you know, this didn't look mega ultra bullish, right? But
yeah,
that's how it ended up. And the point is you treat every cross the same because you don't know how it's going to look. You just understand that, okay, we're bullish now, right?
And the idea with anything where it's a trend following strategy is when the trend stops and it starts to chop or consolidate significantly, it really increases the losing trade count for those strategies. So to counter that is when this trend is strong is to basically stick with it and follow through, like essentially obeying what the trend is telling you, because that's when you're going to make all your money, is when that trend gets really strong. If people want to use the cloud, if you want to use moving averages, I linked on Twitch, and I'll put it in the show notes for the folks listening, not live, to, what do you call them?
The videos?
Indicators. 2 indicators that that I have because it makes these things slightly easier. One is called the Ichimoku Cloud with presets with Ledger in the brackets. This is essentially got the doubled or singled settings, which are basically fast or slow versions, and it's got traditional settings and what Josh pinned as crypto settings. When Josh has the cloud on this show, it's usually doubled settings crypto. So it's like slightly different offsets and stuff to draw that cloud. So I've got those pre-built into that indicator. And then if you like all the moving averages and stuff that I show on here, I've got moving averages, Bollinger Bands, monthly open, high, low, close levels, different things that you can toggle in Ledger Status Toolbox. Those are 2 scripts on TradingView that you can check out if you've never seen those before. And that allows you to have one indicator on TradingView with your free account and get more than one thing from it. So shout out for people that are new. Those things exist.
Yeah, the importance here really is just the comfortability with being able to say, all right, am I using leverage here? Is my size going to be sufficient? Like, am I going to be able to sleep at night? That sort of thing. And settings, these specific settings won't have a lot of entries and exits. Like, again, this is a long exit that's been an entry since October 2020. So I'm not trying to sell anybody on the cloud. I'm just trying to help you understand why I do what I do as far as cloud is concerned.
Yeah. And the cloud's going to tell you a little more than, like, I like to use moving averages because the thing I trust the most is, like, for finding long-term support is going to be like the 200-day, 200-week. I've talked about this plenty. But even in the near term, I really like this kind of 20-day flip trade. So it's giving me a pretty clear trade opportunity here where it's consolidating above the 20, and it gives me a stop, and it gives me a place where I can be long from to expect continuation if I think it's going to move ahead. But like whatever you use, just get comfortable with what you use, what starts to speak to you, the more hours that you spend in front of the charts. If you're going to trade technically, find yourself a system, get comfortable with that system, understand how it works historically so that you can identify what's happening in the future, and then try to trade with it. And don't like freak out all the time based on what's happening one way or the other. And you missed a trade based on that system one time, so I'm going to switch systems. That's where you're going to lose the most money. So.
Right. And I'll tell you my mentality here on the high time frames is let this chop around. I'm not feeling like I'm missing out on anything. I'm not feeling like I'm pressured to get into a trade here. I know what I'm looking for, right? Like I have a plan and a trade already set up when it happens, if it happens. That's the beauty of using any system. But anyway.
Keo Dark is turning into a little bit of an AMA, but that's okay. If hodling outperforms traders, how do you realize that profit and not lose it all to the bear? You take profit on the way up. You take profit when some of these triggers start to reverse, which allows you, as Josh just said, to capture not the whole trend. As an example, using moving averages, if you sold when we crossed below the 20-week moving average, we crossed above it in April 2020 at $7,900. So if you closed the trade when we crossed below it, if we did that today, it'd be like at $47,000. Well, you just entered at 7,900 and you sold at 47,000. So you did okay. Like you didn't sell at 60, you sold at 47. Did you sell a bottom? Maybe. You can get back in if it goes above. That's what I was like. This is the weekly macro-y version of protecting yourself and catching 80% of the trend. You didn't buy the bottom, you didn't sell the top, but you got the meat of the trade and the trend following strategy, and you should walk away proud. So that's how you can play it. If you want to like stay in until it tells you to not be in. If you want to just get out because like you're too euphoric or it went so far, yada, yada, you can do that with the knowledge that it might go further than you expected.
Yeah.
How else would you say to take profit?
We'll get to the ETC case in a sec, but I agree with that. You know, just use some high time frame, very slow, not high trigger potential as far as you don't want anything that's noisy and loud telling you to get in and out all the time. The 20-week SMA is perfect for that. Just very simple. You know, you don't want to have to think about it. You don't want to have to make any emotional decisions one way or the other. And 2017 is a great example for that.
Mm-hmm. And in that one, the one additional hint would be, and this is a little more technical, but like when it got so far away from that 20-week moving average, it was kind of a hint of overextension. Like it was more than 100% off of the 20-week moving average. So like for you to actually sell when it crossed down, then comes back up and like you feel like you're capitulating a bottom, but it turned out you were actually selling at maybe 11K, something like that. But the hint ahead of time was like you're over 100% away from that thing, and it just needed to chill. I've been saying that on this show.
Well, that's where the moving average multipliers come in. You know,
yes,
exactly.
Yeah, we can talk about that in just a minute too, because it's a great ad. We were 100% above the 20-week, which I was talking about back when we went to 50 something the first time, or 60. And like that's why these last couple months of consolidation have been really healthy, because it's basically the percentage away from the mean gave the market a chance to cool down. And now my like distance to wrong is a lot closer of a trade. So it makes it easier if you stop out, if it breaks down. And it also just gives a chance for the moving averages to catch up, for the market to cool down, to have a reaccumulation opportunity so that people who have made their gains and want to walk away can do so. And then the market, if it's still bullish, can carry on for the next leg. It's never a terrible thing for like the moving averages to catch up a little bit and the market to take a breather. If it just goes straight up, the down is going to be hurt more. Like as you see in 2017, November and December, 1, 2, 3, 4, 5 weeks, going from 7K to 20K. That's the 3X in the largest asset in the space, and it signaled the top of the market. So.
Yeah, and that's a good reminder for any of the altcoins that are up a bajillion percent.
Yeah, there's altcoins that fit that criteria right this moment.
One last thing I'll say about BTC is that the 4-hour is bullish on the cloud, and the potential inverted head and shoulders stuff is happening again on the 4-hour, just as it was in a greater fashion a few days ago. So to me, even though this might be like the chart pattern purist, this might not be a perfect anything, but it signals to me that the market is trying to have a bias here. It's trying to buy the lows. It's trying to find.
I think this is reaccumulation. Like, but it's really tricking me a lot. Like it's hard to get in a trade, which usually means it's a good time to try.
Yeah, for me on the 4-hour, this looks great as far as a punt, as the kids say, to all-time highs or all-time high retest. But anyway, that's the low time frame BTC. But overall, I think we're fine.
Monday, I told myself I wouldn't take a trade until we were above 59K, and I took a trade at 58K, which probably means I'm going to get stopped out at like 56. That's okay.
I think you'll be okay. And I guess let me just bring up the multiplier too for BTC.
Oh yeah. So the MA multiplier for the whole trend thing, like, so you heard us talking about like return to the mean, catch 80% of the trend. If you're trying to sell because it's too overheated, you can look at MA multipliers, which Josh is pulling up now, because this is essentially saying like, how exactly far from the mean are we? Like how overextended are we? And this can give you some hints of where you are relative to past cycles. What is this indicator? Because I love how it actually shades it red and green and stuff. It's good.
It's just called 2Y MA multiplier, 2-year MA multiplier. So originally, I don't know who first, like, I don't know if this is like a known thing in legacy markets. I've never heard of it outside of crypto, but anyway, it's just an MA multiplier like we're talking about, and then a multiple, in this case 5x back tested is what looks good as far as picking out the highs, picking out the lows. And currently the high on BTC is at 87.4. That's going to keep moving up as price per day, like as price moves up, because the bottom moving average is moving up.
Yeah.
And the bottom moving average is the 2-year. It's a 730 MA. And historically, we've had 3 or 4 weeks beyond that 5x as far as a blow off. So again, taking profit, like I'm not thinking about taking profit until we're above 87, whatever, 87 plus, whatever it is. And that's a dollar cost average out of BTC into fiat over 3 weeks. So maybe every other day sell some, maybe every week sell some. But I'm highly confident in this. I don't think we're going to go to 300K. And if we do, I'll have a little left just to sell it at 300K. But that isn't the plan. The plan for me is to sell as we start to escape this overbought territory.
Yeah. So shout out Cred, who helped host last week while Josh was out. He talked about something yesterday or the day before, basically saying that he thinks that BTC is going to do something because Bitcoin just can't sit here and lollygag with lower highs and stuff and all this other continuation occurring in alts. Bitcoin's going to wake up and kind of choose a direction for the market, probably. And if it fails to do so, that's probably not very good for Bitcoin. And anyway, leads you to risk off. The reason I bring that up is because I actually think Bitcoin is a little bit of a sleeping giant right now. Like ETH made that huge move. We'll talk about it in a bit, ETH BTC, but alts running like crazy, old coins running like crazy. And this reaccumulation, I have stronger feelings about it, in part because, Josh, this is like probably the single worst week of the dollar since in like the last year that we've been tracking it, because completely failed its trend reclaim, 20-week moving average, and looks like it's just ready to melt down, which further indicates to me what I talked about not too long ago, that I think we're kind of in this similar scenario that we were in late 2017 when the dollar crashed. That also insinuated at the time close to the end of the bull market for Bitcoin. But like it looks like it could just melt down here for a period of weeks as it makes new lows and goes down to that 86, 87 range that we talked about as a 200-month moving average target. New multi-year lows. That's like a Bitcoin go up, stock market blow the lid off, commodities blow the lid off. Like that's what this all screams to me. And this close that the Dixie's having today is just truly atrocious.
Yeah, so I do a legacy video every Thursday for Brave New Coin. Shout out to that YouTube channel. But what I said, if you pop on the weekly cloud or pop on the cloud there, the issue is the cloud on the DXY is painting a massive C clamp, suggesting oversold. The other thing is it's setting up for a potential inverted head and shoulders there. So if we're bearish DXY, which I think is very reasonable, we just have to be careful that this doesn't actually reverse to 96 because that's where it wants to live right now. Like if this was just technical and nothing else going on, 96 is what I'd be looking for.
Yeah, but you don't know when it's going to bottom, right? And you can play it. So it gave a fake out. If you're going to play that strategy of like, let's play, you want to play the gap from the fast, the Tinkin to the Kijun. Price wants to move to the Kijun over time. This is a weekly chart in legacy. That can take years. But like if you look at this example back here, it can get pretty far extended below the fast one, below the Tinkin, and then work its way back up. That's all that. The reason I say that is because I think you're right. Like, of course it wants to move back up at some point, but it looks like it wants to capitulate down first. You know what I mean? Like it can really stretch its legs this way. And lead to six-figure Bitcoin over the course of 2 months, for example, and still all of that be true. So I could imagine the Dixie breaking down, sweeping the 2018 lows before finally bottoming, being overextended, and working its way back up and giving us a little bear market potential in crypto. Because these dollar bottoms and dollar tops have indicated basically macro shifts in Bitcoin over the years, and I'm going to continue to think that it will until it doesn't.
Why was it down to? Was it jobs numbers that hit?
I don't know, man. Maybe. I just know it got wrecked. And the stock market like pumped like crazy.
I was going to say, if we look at the, let me just pull up the SPX weekly, it's the exact opposite. This is the thing with like having a system and knowing what it's trying to show you as far as being overbought or oversold. If we go on the weekly cloud for SPX,
it's far from the mean.
This is super scary to me if I was on the long side of this, because it says we are so overbought. We are overbought like crazy. We are the most overbought we've been in ever, probably. like I can't even scroll back far enough to find a gap that's that big on the TK lines. So I don't know if that's just a March mean or averages problem where like we were so oversold, the averages are way below us still, but this looks scary. So I was saying DXY looks like it could reverse bullish. SPX looks like it could reverse bearish. Collectively, that should be bearish for crypto as well, if we see that.
We've talked about pivots on the show a good bit. The SPY is just a wee bit away from its R1 for the year.
That too.
Which could be kind of your local resistance.
There isn't a bull div though, or bear div though yet on RSI on the weekly. So
yeah,
maybe
I think this is just gonna like has a chance of melting up and being a big push for Bitcoin as well. I would expect in that same circumstance. And I mean, I do think it needs a retrace. Like it's kind of crazy,
yeah.
But it's not giving proof of that. And by the same metric, if you're looking at SPY, what is the distance from the 20 week here? It's about 7% from the 20 week. So you could like take a drawdown of 7%. If it goes below the 20 week, maybe that's when you think like, okay, I'm going to risk off. But in legacy, like it's almost always a buy. So it's kind of complicated, you know, like how do you sell and how do you buy? Like making any adjustment to your strategy when the market does this, like this straight down straight up new highs. It's just insane. Like legacy is impossible to trade almost for me.
Yeah, it's it's a mess for sure. And the weird part is the rotation from Nasdaq to SPX has been extreme. I know this isn't like a legacy show, but it's important
Yeah.
to understand the movements here because they're so tied to crypto with risk on environments. The correlations are basically 100%.
Gypsy in the chat says Michael Burry called the everything bubble months ago, and he tends to believe. Yeah, I mean, the everything bubble has been a theory for years. That's the problem, right? Like, this market started making me nervous in 2018, actually. The vol crisis is what this was back January, February. I had not given a crap about markets, not even in 2015 when it had that, like, this whole situation. It's like, I can't remember what they called that, like the earnings recession or something like that. I didn't care. I did not care about the stock market in any of this. This is when I started to care. And like this year alone makes all of this look unimportant in terms of how much it's gone up. It feels very, very bubbly to me. But I don't know how to fade it or when to fade it, etc.
Did you see what the Fed said yesterday? They said, what was the exact quote? Something about inflated asset prices could be at a detriment when risk-off environment hits. And it's like, yeah, no shit. Like, welcome to the show. Like, of course, stuff is like insanely high right now.
So I'm actually with that meltdown of the dollar, with what we talked about, potential continuation with Bitcoin. The other interesting chart to me is actually gold is also reversing its trends. So after it made its all-time high, it just punished any gold bug ever since August 2020. Because like this is just so painful if you're a gold person. 20% down in a time where like all this money was printed, Bitcoin mooned, yada yada. But then it bottomed and now it's broken its pretty clear levels around 1800. That's the 20-week moving average, and then people that look at the horizontals, it's 2011, 2012 highs. So actually I think gold is a pretty unpopular trade at the moment because it's underperformed literally everything. Literally everything.
Even, well, I won't say it. Even certain altcoins.
But it honestly looks really good to me. I took calls. I bought calls in the legacy market for gold miners yesterday because I think actually this wants to do things. I think like
that's a crazy Wyckoff accumulation.
Isn't it really? It looks like, and in the face of like the everything bubble and all this, if you're looking for equities, if you're looking for inflation hedges, like a lot of stuff does point to, in my mind, both Bitcoin and gold. Especially after Bitcoin hasn't made an impressive high since February. I realized Bitcoin's up 10x and gold is like flat, but sucks to be a gold bug. But I think gold's going to have its minute. You look at lumber, you look at oil, you look at pretty much copper, commodities, bubble prices across the board. Combine it with like the reopening trade, if you will. Like people faded Zoom, they faded Peloton, all that kind of stuff. Potential inflation coming back as people don't want to go back to work for a variety of reasons. Restaurants are closed because they can't get workers. There's a lot of good reasons to be interested in gold, in my opinion, and in anti-inflation assets without the economy crashing. So it's like the economy is booming, but we see potential inflationary trends at the same time. That sets up a pretty decent market for gold and gold miners and Bitcoin, to me.
I will keep my gold exposure at a minimum and my
that's fine.
Digital gold exposure at a maximum.
That's fine. I have long said I do have equities exposure, and I do stuff with that, but it's like a different planet for me, you know. So I'm just talking about how I'm approaching it in that planet.
It's a different mindset, 100%. It's a way to hedge against, BTC shenanigans too.
Gold sucks when long-term rates go up. That's correct. So like real yield type of stuff. The thing to consider there is like yields are still stuck in a range, even if they go up a bit. And I don't think yield is going to be so troublesome because I think the Fed can't afford it to go up too much. They'll do like yield curve control or something. And anyway, I just think the macro landscape is good for six-figure Bitcoin. I think it's good for gold to finally have price exploration and underperform Bitcoin, but that's okay. I keep it in a different account.
I don't look at it.
Yeah, I really don't. Like, I don't care.
Yeah, exactly. That's how I feel too. Let's move on from the boomer coins.
Yep.
Talk about ETH a little bit. If we use that same mentality with the MA multipliers for ETH, it's pointing to 4,500 plus. And
that makes me happy.
And on back testing for ETH, historically, it's been a mix of outperforming that as well as like sniping it. And you always have to be careful about, this was twice in 1 year, essentially. It basically regathered itself and went again. So this is the type of fractal I'll be looking for sure, as far as leading into 45. I'll be selling ETH up there too. I'm talking like cold storage ETH, right? 100%. I think it's time at 45 plus to get rid of it.
See you at 10K, bro.
That's fine. I'll be DCAing. I'll be DCAing out at 8K, 9K, whatever it is. This is what is this? This was how many weeks? Hold on.
Dams says 10K is FUD.
50 days above this multiplier. Reaccumulated, made an Adam and Eve / ascending triangle, and went again.
Yeah, but that accumulation period, Bitcoin mooned, and ETH felt terrible on ETH BTC in that period. That is the prototypical daily ascending triangle when you zoom in on that. I know because I've made the video on it. But it was like so painful. You and I talked about it that December. Like, this is the most obvious trade ever in the history of the universe. And then it just was like, okay, up we break. And then it went like 4x in 3 weeks or something. But that consolidation was not a time to be in Ethereum in crypto because Bitcoin was rampaging at the same time. I look forward to that occurring again because this time I know how to play it better. I think for what it's worth, like ETH could do the 4,500 move and then follow a pattern kind of like that for a few months. And yeah. I want to be long ETH into the summer, see like what's up, be mostly ETH denominated. And then when it looks like ETH's ready to just consolidate, I go back and I play the Bitcoin move, hopefully nail my rotation, and then I look for that power move into 5-figure Ethereum. That's what I want.
5-figure.
5-figure.
That's above 9999. Yeah, I don't, currently I don't have any bad feelings about that. Again, you have a system, you have a plan. I'm happy with any profits at this point. I said I was a bear above 750, if you remember, from months and months ago on ETH, and look where we are now. So I'll be happy with 4 to 10K. I'll be ecstatic with 4 to 10K.
You know what I'll be? I'll be looking at fees.wtf.
Yeah, I can't. It hurts my soul too much to look at that anymore. So yeah, that's ETH for me on high time frames. I think it's at no risk for any crazy bearish shenanigans. And ETH's daily cloud looks phenomenal to me still. It's getting a bit ahead of its TK lines, so there's some risk for mean reversion there.
You might want to wait for a tap on the Tinkin or fast moving averages to get new longs on ETH, but it's not telling you to sell. Right.
So it's definitely overbought, but it's not insane overbought. But it looks fine, and that's kind of all I have to say about ETH. Really, the TA on ETH has always been pretty clean, honestly.
Sir,
to BTC.
That is not all you have to say, because
about ETH. I mean, we could talk about ETH BTC.
That's right.
But
we're going to talk about ETH BTC. I'll pull it up. Don't worry.
This is all I need. I don't need your stinking charts, bro. This is all I need.
You need my charts because the red line, the magnet that I don't know how many times.
That's not a magnet. It's a red line.
I don't know how many times we talked about it on the show, 0.055, as saying it was a magnet, and then with further conviction saying, and actually I think it's going to blow through it just like Bitcoin did 6K off the bear market. Ethereum is so bullish. 0.084 was my adjusted target. The third lower high of the bear market that I said I thought it was going to propel through 0.055 and go into 0.084. Now, this is not financial advice. This is how your friendly 100 IQ ledger status neighborhood guy is going to play it. If 0.055 comes back, I will have the world's tightest stop. Not really. I have no stop. I will buy 0.055 as hard as I can with whatever that means, dollar terms or whatever else. And I will play the 50% BTC relative move to 0.084. To me, if people get caught off sides and crypto dies for a couple of days, this is the type of like thrust that you could see to the downside. And then you just have this like epic trade potential to increase your Bitcoin by 50% as it goes to 0.08 plus. That's what I want to play. What do you think about that?
Yeah, I think it's a reasonable plan. We'll see if it happens, right?
Gypsy's on fire today. I promise y'all, listeners at home, we have 450 people in this chat, but his comments are the funniest. He said, I'll copy Ledger, but actually make money. I hate how true that probably is.
So I like 0.08, I like 0.1. The measured move off the inverted head and shoulders, if this is even what that is, but the multi-year highs, whatever it is, we're basically in that zone of expectation as far as from this specific consolidation. I would, at this point, it's up, 6 weeks in a row? At this point, for me, it's a better trade to just let it do its thing.
Dude, how much does ETH BTC look like that GDXJ chart? Just as that long-term bear market.
With the spring?
Wyckoff, yeah.
I mean, there's definitely a weekly tweezer bottom here for sure. Yeah. I don't know about Wyckoff per se. It's kind of a mess, but I don't think it fits anything perfectly. I just really like this pitchfork, really, honestly. So yeah, I like rebuying at 0.51 if it even gets that low. We'll see. But I definitely like rebuying anything that breaks down because it feels like it's running hot to me for sure. And I know people are using ETH for all sorts of stuff. Great. That's awesome. But it's hard for me to buy anything that's up. What percentage is this over the past 6 weeks? 112%.
Not enough.
112%.
22 in the chat asks, why not new all-time highs on ETH? A new all-time high on ETH based on current supplies would be almost an ETH BTC flippening. It's not that it can't happen, but when people start talking about that too much, I'm going to get a little nervous.
That's why I was happy. I was happy to see people already talking about it. I'm like, yes, bring on that flippening, boys. Let's go.
The 0.055 was like my definite has to happen. The 0.08 is my euphoria. The 0.1 is my, oh my gosh, this is insane. And then everything beyond that is just like, just sell a little bit every day. It's just like, this has been amazing. Let's enjoy the ride.
Well, that's a good point. Let me look at the MA multiplier for this. The thing with markets that have been ranging for so long is the MA multiplier is just not as valuable typically because it's so noisy. Yeah, it's calling like 1.7.
Do it.
MA multiplier, that's the 183. And you do have to back test.
This is the moment that Josh Olszewicz realized that the flippening is going to happen.
I have no problem with that, the flippening at all. Because I know what happens in a bear market. So I have no issues with that. Yeah, honestly, 1.7, basically all-time highs. It's not crazy for sure.
Yeah, it'd be interesting. Josh, I want to spend just a tidbit if you have any altcoin chart thoughts, DeFi stuff, because I got to go in just a minute.
Yeah, virtually every DeFi chart's at all-time highs. Even Sushi, which looked like crap a few days ago, looks much better in the past few days.
I think pretty much everything blue chip looks pretty good. Reaching highs. This includes like old coins. The one I'll show personally, because it represents several DeFi charts and old coins, is Curve. Like it's basically trying to clear highs, and I think it looks like it's ready to do it basically. but it's got very clear levels. That's why I like it as an example. And then the other one, oh man, what was it? I think it was Tezos or something. As a representative old coin, very similar. Like people were so out on Tezos, and it basically has similar looks about it. Like, looks like it's going to do things. My beloved ZRX that we've talked about, very similar. Like these are also its all-time highs from 2017, and a lot of the old coins look like that. Litecoin just cleared a LTC USD all-time high. I can't freaking find it. Anyway, like they're all very similar. Like they're all just going ham.
Yeah, that's why I like the basket approach. I like the rotation approach. It's rotation season for sure. I'd be aggressive with that personally if I was.
Yeah, I mean that's a Litecoin new weekly high all time. Like that's a long, even though it's extended, because that's just it's hard to fade an all time high with volume throughout that like vertical accumulation. You know, like the breakout volume is kind of next week. Like it's the type of thing where you could say, okay, next week Litecoin goes from like 350 to 500 in one weekly candle with volume. That's what it looks like it could do. You look at LTC, BTC, the people are finally proven right on that.
The weeklies looks like it's got a ways to go yet, even on the cloud.
Yeah, this is where I like another time where I like these weekly moving averages. They're just these random points in time that just show you like, okay, this is just going to be a magnet, 0.0092. Go ahead and bank on it, you know.
Yeah.
And what's that percentage?
Rotation season, sell half on a double season.
Yeah.
Just be unemotional about it. That's my best advice, honestly. Don't get married to some community and then end up a Tezos bag holder for 3 years.
Yeah. And then also kind of know where you could be wrong. Like where could it be rejected? What are the downside potentials, etc. When the Bitcoin reaccumulation ends, if it breaks up, it's going to probably push down these BTC relative pairs while the USD pairs continue to have some degree of price expiration. But if Bitcoin like stays quiet for another couple of weeks, then these are just going to moon in my mind.
Yeah, I mean, Stellar is another one that hasn't done.
Yeah,
let me pull up
we don't even have to go down the whole list. Like, I mean,
yeah, but it's all the same story, right? Like the coin doesn't matter. That's the most important thing here. It's just the fact that it hasn't moved yet or is due for a move over how many years, right? So Stellar is easy at 2x, 3x from here if BTC does nothing, right?
Yeah. Yeah. Like I'm just talking about bags that I like because I don't mind holding them. Like I'd rather hold ZRX all day versus Stellar. Yeah. But the chart's probably very similar. But I look at this ZRX chart, it looks like it's ready to blast versus BTC. At the same time, it's making new highs versus USD. Like that's just a trade I can sleep in. I can hold a lot of it and sleep in it and feel okay about my life. You just got to do that with the coins that you feel that way about, no matter what they are. And it could just be Bitcoin. Could be dollars. Could be whatever.
Look at this Maker BTC chart. Maker, man.
Yeah.
It's a bag of mine, so I'm just happy to see it go up.
And maybe Maker is the telling us the future for some of these other ones that are going to make that. We don't know. We'll see. That's my thoughts. Yeah. Josh, I got to go.
No, that's good. Thank you, man.
Appreciate everybody being here. We'll talk to you next time. Give us a rating and review on iTunes. Yada, yada. See you later. Monuments crumble. Oh, and thanks to Token Sets. Go to ledgersets.com/sets. The easy river has just run dry. In a house of cards, I feel the breeze wound so tight I can barely